The E-mini had a good-looking reversal day on Friday in a bull trend, so you'd expect today to go above Friday's high. We gapped up today, we gapped down on Thursday, so we have a two-day island bottom. But as you know, island tops and bottoms are minor patterns. Rarely a minor pattern can lead to a big move, but most of the time it does not lead to a big move. So when you look at that, you don't think, oh my gosh, I got to buy, it's going to go way up. No, you just think, oh, it's just another day. And parabolic wedge, one, pull back two, pull back three, not very good shape. So confusion usually results in sideways. I think we're going to start to go down for 2 or 3 weeks because of the weekly chart. It was interesting. We had that big rally at the end of Friday, and that was enough to get the weekly chart to close above the open. It's hard to see here, but the close was above the open, and it's a bull body. So we have 1, 2, 3, 4, 5, 6, 7 consecutive weeks with the bull body. And what are the chances that this week will be the 8th? Very small, because 7 happens extremely rarely. You have to assume 8 happens even less rarely. So 7 happens, I don't know, probably, to be honest, I don't even remember the last time the weekly chart has had 7 consecutive bull bars. And therefore you have to assume 8 is even less likely. So I think Friday's close will be below today's open. I said that last week. I thought that Friday's close would be below the week's open, and it closed just a little bit above last week's open. On the weekly chart, you can argue might double top, up, pause, up again, pause, but a weak sell signal bar plus an 8-bar bull microchannel. The odds are right now a 7-bar bull microchannel. The odds are that with buyers not too far below last week's low, I think we'll probably pull back for 2 or 3 weeks, probably starting this week. Gap, is it big enough to stay open? It might be. But I do think the week will close below the open. We had that big breakout at the end of Friday. And when you see that in a bull trend, 60% chance it's either the end of the trend or you get one more leg up, and that is the end of the trend. So this is a possible early high of the day. And then you add to it the weekly chart, likely to have a bear body on the weekly chart. That increases the chances that we could get an early high of the day. If we get a bear bar closing on its low, that would be a credible sell signal bar. If there's a bear bar but it does not close on its low, a lot of traders will wait to see what the next bar looks like. 60-minute chart. We have a wedge. You expect 2 legs down. We might have 2 legs. It might be 1 pullback, 2, but I think more likely it's 1 pullback and then 2 starting sometime after today. Friday, we had 5 consecutive bull bars, pretty strong trend, 60-minute chart, bull channel, 5-minute chart. Unlikely to get a bear trend without first going sideways for a couple of hours. So not a lot of downside risk over the next couple of hours. I said 60% chance either this or one more leg up would lead to the end of the bull trend and the conversion into a trading range or a reversal into a bear trend. That means 40% chance it will not. 40% chance will go up for at least a couple legs. But not a good buy signal bar. We're trying to close that gap on the daily chart. This is the bottom of the gap. We gapped down on Thursday and sold off, and we're reversing up, so down and up. And the bulls would like to close the gap. They'd like to get above Wednesday's low, which is the higher of the 2 pink lines. And bears, they're hoping that the 2 to 3 week sell-off has begun. And if it has, then it would increase the chances the bulls will be unable to close the gap, that the gap will stay open, and that will form a lower high on the 60-minute chart, and then a second leg down. Unlikely to go straight down after 6 bars up in a micro channel. So the best the bears probably get over the next couple of hours is sideways. And the bulls, 40% chance strong bull trend day, or at least strong trend for the first 2 hours. 60% chance no, sideways or down. Probably sellers above 1. We have a buy climax 78, and we're near resistance, and we have a weak bull bar on bar 1, so probably not a lot of bulls buying above 1. If 2 is a big bull bar closing on its high, there'll be more bulls willing to buy above 2. Weekly chart, you can argue another lower high since September, but a doji bar and 7 consecutive bull bars, probably buyers not too far below last week's low. That's why I'm saying we may pull back for 2 or 3 weeks and go sideways, and then the bears would try to create a double top, and they would have a better chance of testing down. Bulls will try to get a bull flag and get us up to the 2800 area. We have a triple top, October, November, December. I think we're going there, but I think we're going to pull back first. Here's the triple top on the daily chart. I think we're going there, but I think we'll pull back first. Very strongly up. I suspect we'll pull back for several weeks, form a higher low, and get a second leg up. And then we'll have a head and shoulders bottom, left shoulder, head, and a pullback to a right shoulder. And then the market will decide, does it go up to the September high or the December low? None of it is clear right now. And when things are unclear, usually the market is in a trading range. To sell below 2, bears need a bear bar closing near its low, and they also want a bear body that is a reasonable size, at least 3 or 4 ticks. Otherwise, traders will wait to sell. The bulls know they have a bad buy signal bar 1, and they're trying to get bar 2 to close on its high. And if they do, then they'll try to close that gap up there. You can see hesitation. The bars so far are small, and tail, top, and bottom of bar 1. There's no sense that the price is terribly wrong. There's a sense that it's uncertain. Do we go up? Do we go down? Do we go sideways? So it's a trading range open. Bar 1, by having tail, top, and bottom, that increases the chances of a lot of trading range trading for the rest of the day. It's telling us traders are uncertain. And if they're uncertain at the start of the day, there's an increased chance they'll be uncertain throughout the day. So that very first bar often gives some idea of what traders are thinking. To sell below 2, I think bears will want at least a 3-tick bear body, 4-tick bear body, and a close on the low. We have a gap above. We gapped down on Thursday, and we have a gap here on the 5-minute chart above yesterday's high. And we have magnets, yesterday's high, 60-minute moving average, 5-minute moving average, and then magnets above the top and bottom of the gap. Not a good sell signal bar. The tail, it's a 3-tick body, but it's also a 3-tick tail. Possible high of the day, and it's a reasonable sell, but not a very high probability sell. Higher probability, wait to see if 3 is a pretty good sized bear bar closing near its low. First 2 bars, trading range bars. Bears made money selling above a bull bar. Okay, right? You get a bull bar, you think it's going up, yet the bears sold it. The bulls made money buying below a bear bar and a buy climax, and they made money. So limit order open. Bulls willing to buy below a bear bar. Bears willing to sell above a bull bar. So traders strongly feel that This is not the start of a trend. If 3 closes on or near its low, then we'll probably get down to below Friday's high and down to the 2 moving averages. Before I left to Orlando last week, I said that I bought puts on 2 different days. I think one was here after this buy climax. I said there was a 40% chance this doji was going to be the start of a second leg down, 60% chance we would go a little higher. So I bought puts there, and then I bought twice as many more up here. Before I left to Orlando, I placed a limit order to get out of the first set a little bit better than break even. So I'm out of those, and I'm still holding puts from up here. They're still profitable. I had over $2 profit per put last week, and I thought about taking partial profits, but I did not. So I'm still holding the full position. Bulls, a high 2, high 1 above 1, high 2 above 2, but 2 doji bars. It looks like the bulls have not given up. They're still trying to close that gap. However, most bulls are not going to buy above 3 because they don't want to be paying far above an average price for price action that is not far above average. The bears, if 3 closes near its low, they'll probably start selling, expecting the market to get down to the average price. Right now, the market has not decided yet whether it's going to close the gaps above or begin to sell off. Buy climax, gap up, buy climax. Not ideal for the bears, and certainly not good for the bulls. It's a high 2, but consecutive bear bars and magnets below. So we always in short. I'd like to see a bear bar closing near its low and having a pretty good sized bear body. And I want consecutive bear bars. And we have consecutive bear bars, but we do not have strong bear bars. So this looks like limit order trading. Buy below, like below 1, below 2, sell above 1, sell above 3, sell above 2. Bears unable to create consecutive strong bear bars. They'll try to convince traders that we're going down by getting 3 consecutive bear bars. But unless they start getting bars closing near their lows, most traders will still view this as a limit order market. 3 consecutive bear bars, but not big bear bars. Is it sell to close? We're probably always in short, but this is not very good stop entry trading. Bulls will try to keep the gap open, but they probably will fail. We have a buy climax and a gap up for a second buy climax. So chances are we're going to get down to yesterday's close and to the moving average. Not a lot of traders willing to sell at the lows. We got tail on 1, tail on 3, a better bar on 4, but limit order bulls bought the lowest low and they made money. So not strongly bearish. Can you buy above 5, a high 2, bar 1? If it's a pretty good sized bull bar, you probably can, arguing the bulls kept the gap open. But with the 3 bear bars, all the bars being small, every bar having prominent tails, it's probably more of a limit order market. They bought below 1, 2, 3, and 4 and made money, and they sold above 1 and made money. Limit order bears were also selling closes. They sold at the market when they had a bear close on 2. They sold the market on the close of 3, on the close of 4. Bulls hoping for a gap up and a high 2 buy. You can see we're far above the moving average, high 1, high 2. Bull bar closing above its midpoint. Some bulls will wait for a second or third bull bar and buy, hope that we get a rally. Gap up, high 1, high 2. A lot of bulls prefer to buy above bull bars closing near their highs, hoping we get a trend up. Big gap up above the moving average. Bulls will start buying above bull bars. Not a very good looking buy signal bar, but it's a high 2, and some bulls waited to buy above bars closing near their highs. If 5 is not closed on or near its high, a lot of the bulls will wait. I think not strongly bullish. Bears trying to get a gap down, a close below 5. They closed the gap above Friday's high. They're trying to get a measured move down. Probably always in short. Support not too far below. Remember, we had a buy climax in a bull channel. 60% chance either it is the high or we get one more leg up, and that is the high. And then the market, the bull trend ends, converts into either a trading range or a bear trend. With the 60-minute chart up as strongly as it is, it's probably going to be a trading range. Limit order bulls, they might buy the 5 low and yesterday's high, and they'll probably buy the moving average. Trading range more likely than bear trend, but trading range on the we could go down further. We could get down to the support. Remember, bears are trying to get a gap. They had a high 2. The bulls had a high 2 bull flag 5. Instead of triggering it, the bears are getting a bear breakout below 5. Bulls now trying to get a micro double bottom 5-6. That would be a higher probability buy, but they really need a pretty good bull bar. And the bears, why are they unable to get big bear bars closing on their lows? And here they have a good opportunity to demonstrate strength if they can close the bar far below the 5 low. And so far, traders are buying the 5 low, and they're buying Friday's high. So not strongly bullish, not strongly bearish, more bearish than bullish, but support not far below. I think 60-minute chart, we're going to form a lower high. Maybe today, maybe over the next 2 or 3 days, and get a second leg down. The target on the daily chart, I think, is this trading range. We have a buy climax, very tight bull channel, a trading range. The bears were hoping it was the top. It was not. The bulls got another leg up. Their scale bears are sold here. They're selling more here, expecting it to get back down here, 2650 area. Bulls, high 1, bull flag, might get one more push up, 1, 2, 3, but I think we're going to come down here before we get up to that triple top around 2800. And right now we're right in between the 2 targets, the tight trading range and the triple top. A lot of times when there are 2 targets, the market goes sideways for a while before deciding which one to reach. The big problem the bulls have is 7 consecutive bull bars on the weekly chart. That is a real problem. I don't know if there have ever been 8 consecutive bull bars in the history of the S&P, 100-year history. The bulls is still a high 2. You can call it a wedge. Reverse up on 1, reverse up on 5, trying to reverse up on 7. But most bulls are not going to buy above 6, so they'll wait to see what 7 looks like. If it closes near its high, it's a possible low of the day. But the bars are relatively small, and every bar has a tail. It makes it more likely that we're going to be sideways. If the bulls were all that strong, they would have not allowed the gap to close. Can you sell the 6 high? I would not. This is a trading range type of open, and we're fairly low. We've been selling off for 5 bars. So selling there is, I think, not great. I would sell higher. The bears had their chance. They needed 6 to close below 5. They needed 6 to close on its low. bears unable. So not enough bears willing to sell at this price level. And therefore, selling at the 6 high, I think it's not worth it. And for the bulls, not a very good buy. Still limit order trading. They bought below 5 and they'll probably sell somewhere above 6. Best choice, wait or trade limit orders. But I think it's too low to be selling. If you're selling, I would sell higher up in the upper half of the range. Limit order trading. Traders selling above everything, selling more 1 point higher, or simply selling 1 point higher. Buying below everything, or simply buying 1 point lower, and scalping. Possible high of the day, possible low of the day, but in the absence of better bull or bear bars, this is more likely going to be a trading range for the first hour or so. So not a lot of bulls buying above 6, 7, or 8. After the first bar, we had a reversal down and a reversal up, and that puts us in breakout mode. Theoretically, there are bulls buying above 2 and bears selling below 6, looking for a measured move. I think that's not the way to trade it, because the winning percentage is too low. The wins, when you get them, if you manage them well, more than offset the losses. Mathematically, it's an okay thing to do, but I would rather wait to see a strong breakout above 2 and then buy after I see a strong, successful breakout, and wait for a strong breakout below 6 and then sell. Otherwise, look to buy some kind of a small double bottom near the low, or sell a double top near the chest of the high that reverses down. You can see the bulls have bought above 8. There are more sellers at the 8 high than buyers. We're still theoretically on the sell below 2. The bulls have not done enough to clearly make it always in long, so I still think it's slightly more bearish than bullish. A lot of times you'll get a high of the day, but the initial sell-off rallies, and you can see we tested the 2 low, so 7 is a breakout test of that 2 low. Everyone wants higher probability, but it's a limit order market, and the probability is not high. It's all limit order scalps. Can you be short, stop above 2, or at this point, stop above 7? I think it's okay. It's a logical high, buy climax, second buy climax. Stop order traders, I think, better to wait to sell a double top around the 2 high, or sell after a big bear breakout. And for the bulls, better to wait for a double bottom, maybe with the 6 low. Bears unable to get their gap below 5. They're trying again here. We're getting near the end of the first hour. Traders are fighting over the appearance of the first 60-minute bar. But even if the bears get a bar closing on its low, it's still a 6-bar bull microchannel, and that reduces the chances of a big bear trend. It makes it more likely that if we get a swing down, it'll look something like this: a lot of overlap, a lot of hesitation, prominent tails, small bodies. Bulls, micro double bottom. You can argue swing bulls bought above 8. I would not. And if they did, their stop is below 6, so they're still long. And the bears are short below 2, but 5, now 6-bar tight trading range. Not very good stop entry trading. Better to be patient and wait for a breakout up or down, or a double top, or a better double bottom. Middle of the trading range, near the end of the first hour. So far, the first hour is a doji bar. In other words, not much indication of what direction we'll follow. First 10 bars warning us that today's going to be a lot of limit order trading. the odds are we're going to get a swing up or down. Bears, they have consecutive buy climaxes, and now they'll try to get a lower high major trend reversal. And the bulls are hoping to get a resumption of yesterday's trend, but with that big bull bar 78 and then the gap up today, which is the equivalent of another big bull bar, the odds are we're going to get a couple legs sideways to down, and we've had one. So chances are we're not going to go straight up. And if we get above 2, chances are there'll be sellers above 2. Everybody wants a breakout, and I think most traders do not care if it's up or down, but they want a breakout. They want stop order trading. I still think, even though it's a tight trading range and very close to 50-50, I still think it's slightly more bearish. We have 3 consecutive bear bars, and we have the consecutive buy climaxes, 78 and the gap up. And then we have 7 consecutive bull bars on the weekly chart, unlikely to get 8. And therefore, this week will probably close below the open of the week, which is the open of bar 1. And it can do it 2 ways. It can have an early sell-off, which it's trying to do, or we could go above and then below. Okay, so a good bar for the bears trying to get a breakout. They tried to get the breakout on 6. They tried to gap below 5. They could not. And now they're trying to gap below 6. Bears want the breakout to fail, just like 6 closed back above the 5 low. And, the bulls want the breakout to fail. They're trying to get 11 to close above the 6 low. And the bears, at a minimum, wanted to close at the 6 low or lower. They would prefer the bar to close on its low. There will be limit order bulls buying the 10 low, buying the 6 low, buying yesterday's high, buying the moving average. But we'll find out over the next few minutes if they're going to be overwhelmed by stop order traders. Okay, close below 6, good for the bears. Always in short since 4, but pretty neutral through 10. And the bears need a follow-through bar. We're getting near the end of the first hour. Bears trying to get the hour to close on its low, but after 5 bull bars, unlikely to go straight down. More likely it'll be, if we go down, it'll be slightly down. Bulls hoping the breakout is a bear trap, so they'll buy above 12 if it's a decent bull bar. For example, decent bull bar, 3 or 4 tick bull bar. If it's a 5 or 6 tick bull bar closing on its high, it's a credible buy. And for the bears, they're still short, but because of the possible bear trap, if there's a decent bull bar, the bears will get out of shorts above 12. If 12 collapses into the close of the bar and we end up with a pretty good bear bar, that would increase the chances of a measured move down. So we have a bear breakout and a breakout mode day, and the market's deciding, have we seen the high of the day, or is this going to be the low of the day? So important bar. It's probably not going to close on the low, which would be very bearish. It's probably not going to have a good bull body closing on the high, which would be bullish. It's probably going to be a continuation of the unclear trading that we've had so far. However, if it does close on the high, bulls will buy, bears will get out. If it does close on its low, it'll probably be sell the close for a test down to the bottom of the buy climax, 78. For the bears, 12 is a low one. It's a pullback in the 11 breakout. So theoretically, it's a stop entry sell below 12. And for the bulls, they're trying to get a good buy signal bar, hoping it's a bear trap and a low of the day. Limit order bulls buying 12 low and trying to buy more 1 point lower. It had to fall 5 ticks, only fell 4. So a lot of the limit order bulls were unable to buy 1 point lower. A lot will try to get out and run break even. And stop order bulls are still hoping that 11 is a bear trap. That's the end of the first hour, bar 12. Closed near its low, and the market went below it, triggering a sell signal for a lower high, but there were buyers below, which you would expect after 5 consecutive bull bars. You'd expect it not to go straight down. It's still more bearish than bullish, and we still have a potential measuring gap. The bodies of these bodies and these bodies do not overlap. So we have a breakout point below 6, and we're pulling back on 12 and 13, and the bears are trying to keep a body gap open, hoping that we get a measured move down. Takes us down to the bottom of the buy climax, which is the target for the swing bears. Micro double bottom, down on 11, up on 12, down on 13, up on 13, bigger high 2, bar 6. I think it's okay for bears to get out above 12. If 13 is an outside up bar with a bull body, it's okay to get out above 13. Swing bulls, they might buy above 13 if it has a bull body, but not a strong setup. This does not have strong predictive value for either the bulls or the bears. Decent breakout, 11, bad follow through, 12, 13. What happens here over the next couple of bars is important. Can the body of bar 13 overlap the lowest body of the breakout, which is the close of bar 9? If so, then the selling probably has ended and will probably go sideways or up. So we have a body gap. There's a gap between the bodies. The lowest body here is the 9 close and also the 10 open. And so far, the highest body is the 13 close. Will 13, we still have a body gap. There's still a gap between this body and these bodies. Good for the bears. But if the bulls get a close above that 9 low, the body gap will have closed. Swing buy, I think it's not a very good buy. I think it's okay to get out of shorts, but to me it's still confusing, and that usually means sideways. Remember the 60-minute chart, we have a 6-bar bull microchannel and 5 consecutive bull bars. So not a strong sell below that bear bar. That bear bar was a test of this sell climax high. We're still always in short. We are, but I'd get out of shorts either above 13 or if 14 overlaps. If the body closes, if the body gap closes, if the close of 14 is above the close of 9. Will a lot of bulls buy the outside up? High 2 legs down, 6 and 13. But bears trying to keep the gap open, hoping that we get a swing down. Nothing is clear. That's trading range price action, and that encourages limit order traders to sell above everything, buy below everything. I said 7 was a possible breakout test of 2. It looks like 10 was also a breakout test of 2. Low 1, you could also call it a low 2 with bar 12. Bears able to keep the gap open. Theoretically, we're still on the short below 2, but terrible follow through after the surprise bar down 11. So confusing picture. Probability not high enough for a scalp buy above 13, not high enough for a scalp sell below 14. So it's on a swing buy above 13. And I think a lot of the bears who sold below 2 got out above the consecutive bull bars outside up 13. Theoretically, they have to sell again below bear bar 14, but when things are confusing like this, traders do not like to sell too low unless it's a second entry sell, like a micro double top. So I think right now we're on a buy above 13, and bears are out of shorts, and they'll wait for a micro double top before selling again. Best choice, most traders, flat. Bulls trying to close the gap. They're trying to get the body of 15 to overlap the body of 9. If they get it, then we'll probably get to the top of the sell climax, up to the 11 high. You can see they're paying attention to that 9 close. Bears trying to keep the gap open. The bears now have a micro double top, up 14, down 14, up 15, and they're hoping down 15 or 16. So more bears will be willing to sell below 14. 7 and 10 tested the too low, and 14 and 15 are testing the bottom of these bodies, and the bulls are trying to get a close one tick above that 9 close. If they get it, a lot of bears will. Okay, you see the bulls. You can see that the bulls close the gap. Okay, the 15 close is above the low of these bodies. That reduces the chances of this continuing down. It does not mean we're going up. It just reduces the chances of this continuing down. It increases the chances of sideways to up. Confusing picture. So traders are trading with limit orders. Most traders should just wait. Limit orders, too much work, too many, too easy to make mistakes. 60-minute chart for the bulls is a high 1. So bull leg and high 1 buy signal. If we do go above the high of the day, we might get a wedge 1, 2, and then 3. We did not quite get up to the sell climax high, so we still might go a little bit higher. Are we always in long yet? The bulls have a credible buy above 13. I think the bears get out above 13. But I think a lot of bulls are not yet buying. They're trying to get bull bars closing on their highs. Those tails 14 and 15 indicate the bulls who are buying are scalping. They're not buying into the close of the bar. They're taking profits into the close of the bar. And bears are continuing to sell above the high of the prior bar, above 12, above 13, 14, 15. Will the bears sell below 16? I would not. They should not have allowed the bulls to close that gap. So if 16 has a bull body, there probably will be more buyers than bears, buyers than sellers below. Let's say it has a decent bear body closing on its low. Most bulls will not buy it. The bears are hoping we're in a bear channel, getting lower highs, lower lows, but even if it has a bear body closing near its low, I think a lot of bears will not sell it. So I suspect there'll be buyers below 16. I am taking some limit order trades in here, but I prefer stop order trades. However, I trade the market that is in front of me. And if it's more limit order trading, I end up taking limit order trades while I wait to see if we get a good stop order trade. Looks like most of the bulls have bought below 16 scalps. It bounced 5 ticks, and then the bulls sold out of their longs. And bears, we have a 4-bar bull micro channel. We closed the body gap below 9. Not a lot of bears willing to sell below 18. So far, 5-tick trap for the bears who sold below 18. Can you buy above 17? Thinking that we're still on the buy above 13. So far today, it's been difficult to make money with stop orders, easier to make money with limit orders. Buying above 17 is buying in the middle of this range, so I'm not going to buy with a stop up there. Still in a bear channel, lower highs, lower lows, but I think not very good math selling below 17. What do the bears need to sell with stops? At a minimum, they want to get bear bars. They want to get bear bars closing near their lows. Bulls are hoping that 18 is simply a pullback from the rally up to 16. We're on bar 18, right? And by the close of bar 18, typically 80 to 90% chance we've seen either the high or low of the day. Today's range has a lot of reversals, and so it's probably 80% chance we've seen either the high or low of the day. Bar 18, market often tries to either break out or reverse. You can see the bears are sold below 17. They're not. They don't have a lot of conviction. You are back above the 17 closed, and that means a lot of the bears are sold below 17 are buying back their shorts. They're not confident that we're going lower. And we have a bear channel. Bulls are hoping this is the start of a bull channel. They're hoping that 18 is simply a pullback from the rally above the 13 outside up bar. Nothing is clear, and because of that, as soon as traders get a small profit, they take it. Lots of scalping. Bulls trying to get a credible buy signal bar. Math really not all that good. Basically middle third of this tight trading range, and that's bad for stop entry traders. You can take it for a swing, but higher probability. Wait to see if we get 2 or 3 consecutive bull bars closing near their highs. For scalpers, the math is probably not good enough to buy above 20, or excuse me, buy above 18 and scalp for 1 point. You're risking 3 points to make 1 point, and you have to be right 90% of the time to take that scalp. A lot of traders who buy above 18 will end up scalping out if they're disappointed by 19 or 20, but they're not taking the trade with the intention of scalping out. It'll be easier for bulls not to buy above 18 if it has a 3-tick tail on top. If it closes on its high, bulls will be tempted to buy. And for the bears, they really need consecutive bear bars closing on their lows, and so far does not look like they're going to get it. So it's still limit order trading, still a confused market. So for the bulls, a higher low after bar 13, but a doji and a tight trading range. So most bulls are not going to buy above 18, and most bears did not sell below 17. Best choice right here, wait. Origin bears have not had a good reason to sell again. And the bulls, I think 13 is good, but I think it's not enough to make a lot of bulls view it as always in long. So there's not enough reason to be swing trading long or short. And scalpers are using limit orders for the most part. Can you sell on a stop below 13, arguing breakout of the 18-bar range? It's a limit order market, and the market's right above the 60-minute moving average. So the math is not all that good. Bears trying to get a breakout. You know, the bulls have a wedge 1, 6, 13, and they're unable to get a very good reversal. Bears trying to get a breakout below the wedge. Best tick readings of the day for the bears. That increases the chances that the first bounce will not get very far. So it looks like a sell to close market right here. I think surprise bar down 20. It's similar to 11, and there the bears failed to get follow through, and the bulls are hoping same thing here. So we have a wedge 1, 6, 13. The bulls are now hoping the wedge is 6, 13, 20, and they want this to be a failed breakout below the 18-bar range. If a breakout below the 18-bar range fails, it usually fails within a bar or two of the breakout. So 21 is important. If it closes on or near its high, it's a credible failed breakout of the 18-bar range. And the first target, top of the sell climax, the 20 high. And it's a problem for the bears. It's about a 50% pullback from this rally. And we're at the 60-minute moving average. There's still room to the 78 buy climax low. Important bar 21. If it closes on or near its high, bears get out, and bulls probably will buy. Swing bulls will buy, betting on a failed breakout of the 18-bar range. If it's going to fail, typically it fails right after, within a bar or two of breaking out. So a couple big bear bars broke below the low of the first 18 bars. I want the 18-bar breakout, but it's the same thing. $18-bar range. This is more like it. Typically, if you get a failed breakout, it reverses up pretty soon afterwards. Here, we broke below and reversed up on the same bar. Broke below, reversed up a couple bars later. Broke below late in the day, but within a bar or two, it reversed back up. The bulls need a pretty good bull bar closing on its high. Late breakout below and bull bar closing on its high. More common for the breakout to fail if you have a lot of trading range trading like today. So important bar. Can the bulls close 21 on its high? I think the bears will buy back their shorts. And if it closes on its high, you'll get some swing bulls buying, hoping that we get up near the high of the day. Most of the time, if you break below the 18-bar range, you still do not, in your reverse, it does not go all the way up to the high of the day. Here we went below the 18-bar range, could not get above the top. Went below, got a little bit above the top. This is kind of like today, lots of tight trading range trading. Broke below, reversed up, could not get above the top. Broke below, reversed up all day, yet could not get above the top of the 18-bar range. We're getting near the end of the second hour. I said after 5 bull bars in a 6-bar bull microchannel, we're probably not going straight down. We'll probably have to go sideways or sideways to down for a few bars. Okay, I would definitely get out of shorts above 21, and swing bulls will buy. Other bulls will wait to see if we get 2 or 3 bull bars and then buy. Is that enough to make it always in long? We're still in a bear channel, and bear channels can last all day. they always look like they are reversing. So we're still always in short. However, it's a good candidate for the low of the day, and it's okay to be swinging along. And bears, I would be out of shorts above 21. Gap up like today, lower high, lower lows, and it kept reversing all day, yet the bear channel continued all day. That's what the bears want today. To me, it looks more like a trading range day. Lots of tight trading range trading here, and then again here. A 50% retracement of yesterday's, or the rally up to today's high, test of the 60-minute moving average, yesterday's close, a failed breakout 18-bar range, and decent bull bar 21. I still think it's going to be more of a trading range day, even though it's a possible low of the day. Globex market, 90% of the time you break either below the Globex low or the Globex high. So far, we have not done either. Bears trying to sell the moving average, hoping that we'll be in a channel down and that the moving average will be a resistance all day. But they should not have allowed such a good bull bar on 21, especially at important support like the 60-minute moving average. So I think the odds are against a bear channel continuing all day. It looks like we're probably going to transition into a trading range. Bear channel, 1, 2, 3, wedge. You always have, when you're in a bear channel, there are always some bears placing limit orders to sell the moving average. Once you break below the moving average, 20, you'll get some bears selling the moving average. Right now, I think they're probably always in long. So I would not be selling yet. Bear still a bear channel. Test of the 20 sell climax high. Wedge bottom 613, big enough reversal. Probably buyers somewhere below 24, not a good enough short. Also, we're above the moving average by several ticks, and that lowers the probability of this being a bear channel. Suppose it looks like this. Let's say it's a great looking sell signal bar. I think the 3 bull bars make it always in long, and the bulls might get out below 24, but I think we're always in long. And for the bears, I think they can argue double top 20, but I would wait for 2 or 3 bear bars before selling. Probably I would wait for a breakout below the low of the day before selling. This looks like a failed breakout below the 18-bar range, and therefore we're probably going to be sideways or up. Sideways here, we're back into this sideways area. This is the end of the second hour, and you can see it's a doji bar. It opened with bar 13, and we're pretty much right at the open. Probably, even if it's a bear bar closing on its low, there probably will be bulls buying somewhere below 24. They might not buy the 24 low. They may begin buying a point or two below, but probably buyers somewhere below 24. Bears double top 20, but I would wait for a second sell signal or for a break below 21. End of the second hour, bar 24, the hour open, bar 13, and it looks like a 1-tick bear body. Looks like it's 24 closed 1 tick below the 13 open. For the bulls, high 1 above 25, and for the bears, double top 20, but I think better to wait for a break below 20 or for a micro double top. You can see bulls about 1 point lower, 2 points lower, made their money back above the 24 low. Stop order bulls want a higher low. It's a higher low, really not enough bars for a major trend reversal, but we're always in long from 21. It's possible that it could result in a bull trend reversal day, down and up, down and up. You can see a lot of bulls did not want to buy the 24 low because it's a big bear bar closing on its low, but they did buy 1 or 2 points lower, or 1 and 2 points lower. I bought 1 and 2 points lower, and I scalped out. Higher low, but consecutive bear bars. A lot of bulls are not going to buy above 25. They'll wait. Will the bears sell above 25? Tight trading range, confusion. I think we're always in the long, and I'd rather be selling higher. This is not high enough up in the bull leg. You can see it fell 1 tick below, actually 3 ticks below the 21 high. So bears who sold the 21 high and scaled in higher made money. So even with a credible buy, a failed breakout of the 18 bar range, test of the 60-minute moving average, 50% pullback, bears were still able to make money. So not strongly bullish. More bullish than bearish at this point, even though bear channel, but not strongly bullish. Higher low, micro double bottom 25, 26, but consecutive bear bars 24, 25. Most bulls are not going to buy above 26. If it's a 3 or 4 tick bull body, you'll get some bulls taking the buy. And for the bears, we're still in a bear channel. We have a double top 20, but because we had 3 bull bars, failed breakout of the 18 bar range and at support, it still looks sideways. Looks like still limit order market. 60-minute chart. Bear reversal bar, but 6 bar bull micro channel and a bad entry bar. It's a doji bar, and doji bar is a limit order bar, trading range bar, balanced bar. Probably buyers below the low of that bar, which is the 20 low, and probably sellers not far above. If 23 did not close 5 ticks above the moving average, the bears would have more traders willing to sell, betting on a continued bear channel. But because 23 closed fairly far above the moving average, most traders do not see this as a bear trend. They see it as a bear trend that has converted into either a trading range or a bull trend, more likely trading range. If the bulls buy above 27, can they put their stop below 26? They probably still need a stop below 21. But if 27 closes on its high, I could see putting a stop below 26. With these 3 bear bars, it's really, with so much limit order trading today, I think it's hard to sell below a bear bar 24 after 3 bull bars. And it's not great buying above 27 after 3 bear bars unless you're buying for a swing. Can the bears sell 5 tick trap, lower high? I would not. I still think it's always in the long. We have for the bulls, it's a wedge 6-13 and a higher low looking for a second leg up. And we have a bull II 27, but we also have 3 consecutive bear bars. So I think not a good stop entry buy for a scalper. What about selling below 29 if it's a bear bar? I would not. Right now we're getting lower highs, higher low. So we're in a triangle. We're at the apex of a triangle. Not good math for stop entry scalps because the first breakout of a triangle has a 50% chance of failing. And if you're looking for a scalp, you have to be going for a trade with more than 50% probability. So not a good scalp. Buy above 27 or sell below 29. And really not a good swing setup either, even though it's on a swing buy above 21. Limit order trading. Buyers below things, below 28, below 26, below 21. Sellers above things, above 26, above 24, above everything, 17. If it's going to be a swing, it'll become clear. And until it does, traders are unwilling to hold on to positions. And I think most scalpers are trading with limit orders. Limit order bulls, 26 low, made their money. Hard to see on the 5-minute chart, but it did bounce 6 ticks above the 26 low. Bulls trying to get a high 230, which is a higher probability buy than about 27 with the 3 bear bars. But the math is still, I think, not very good for stop order scalpers. So if you're buying above 30, it's better to be holding for a swing up. For the bulls, we have a breakout below the triangle, and it's reversing up. And we have a high 227. Both of those are good for the bulls if they get a good buy signal or otherwise better to wait. Limit order bulls bought below 28, they bought below 26. Stop order bulls, some bulls will start buying above 30 if it closes on or near its high, taking a chance that we've begun to swing up at least to the 10 high. Will most of the bulls scalp out or will they hold? Traders have been scalping every trade today. Every bar, every move up and down has reversed within 2 or 3 bars. However, the context here is okay for a swing up. We have a high 2 after a wedge bottom and 3 consecutive bull bars. Target is prior lower highs like the 16 high or the 10 high. The bulls would like to get a new high of the day, but I think the odds are against it. This is a good situation for the bulls. If they can get 3 consecutive bull bars here, then we're probably going to get up to the 10 high and maybe even the high of the day. If they get one huge bull bar here, that would make it likely that we've begun to swing up. Right now the market's deciding, is this just another 2 or 3 bar leg in a trading range or the start of a swing up that could last a couple of hours? Bulls need bars closing near their highs, and they need to get a series of bars, preferably 3 or more. Otherwise, bears will sell. You know the bears are selling the 28 high, and they'll sell the 24 high. Bulls need to trap those bears. They need to get this to close above the 28 high, and they need to get a follow-through bar. Potential for the market to change from trading range trading to trend trading here. Not very good bar for the bulls. It went up 10 ticks and pulled back. That shows you a lot of the bulls scalped for 2 points. It had to go 10 ticks for them to make 2 points. And you can see it went 10 ticks and pulled back. So a lot of the bulls are scalping for 2 points here, which represents a lack of conviction. For the bears, double top 24, but bears are not going to sell below 31 consecutive bull bars. But to me, I think 31 is disappointing. The bulls who did not scalp out with 2 points now are debating whether to scalp out at 1 point. Bullish than bearish, but not particularly bullish. 3 consecutive bull bars, but small bodies, prominent tails. sometimes you get a pretty strong trend if the breakout below the 18 bar range fails. Blue box, first 18 bars. But we're not getting this today. Are we getting this? Well, closing on high, closing on high. We're not getting that either. We're getting doji, tail, tail. More like this. Even though it trended up all day, it spent a lot of time in a tight trading range. So, yes, reversal up, but the earlier limit order market, lots of reversals, prominent tails, continued during the bull reversal and afterwards. And yes, bull trend, but not a very strong bull trend. This is what the bulls want, and they're not getting it. 3 bull bars closing near their highs. We're not getting that today. We're getting more of this kind of stuff, up for a couple bars, down. So if we do rally, it probably is not going to be a strong rally. Now, something I did not say, we broke below the 18 bar range and we reversed up. Is it possible this is just a pullback and the bear trend continues? Yes. It's not likely, but it's certainly possible. I've been talking about this as a failed breakout below the 18 bar range because of 21-22, but we have not gone to a new high. And remember, by the close of bar 18, 90% chance we've seen either the high or low of the day. We still have not gone above the high of the day. It's no longer 90%, but it might be 70%, 60% chance that we will stay below the high of the day. I would say 60% chance now. We have such a strong reversal up. It's no longer 70%. It's probably 60% chance that we'll not get above that. But if we start to get a series of bull bars, all of a sudden, instead of 60%, it may become 40%. In other words, it may become likely that we go to a new high. 32 low, 3 consecutive bull bars, always in long. While not a strong buy, probably more buyers than sellers. Now, it could be this, that we break below the 18 bar range and rally a little bit and then go to a new low, or reverse up and go sideways. This sell-off was much stronger than today's. So break below the range, pull back, but it still looks more bearish than what we've had today. Break below the 18 bar range and rallied, but could not get back above. So this could be like today. Go up for 2 or 3 bars and then down, up for 2 or 3 bars, but fail to get to a new high. How far down does it have to go before traders conclude that it's always in short? I think the bears they really have to get below 20. 3 bull bars, 32. They bought the 32 low. It bounced 5 ticks to the 34 high, so the bulls made money buying 32 low. And for the bears, a double top bear flag, double top 24 if you want, double top lower high major trend reversal. But 3 bull bars and tail 33, not a great sell. Better sell 34, but why were the bears unable to get a better sell signal bar 32, 33? So I still think we're always in long. So not a very good sell. It's slightly better for the bulls than for the bears, but a very tight range. We were tight here and then again tight here. I think difficult for stop order traders. For the bulls, another higher low, 30, 35, but I'm not sure the probability is high enough for a scalp after those 2 bear bars. So it's still on the swing buy above 30, the swing buy above 21. The bulls have bought above 21. Some might have gotten out below 24, and the bulls have bought above 30. If they're swing trading, I don't think they'd get out below 33 or 34, so they're still long. And then other bulls, do they buy above 35? I think 31, 32, 33, disappointing enough for the bulls to make traders think it might be more of a trading range than a bull swing, and that will make fewer traders willing to buy above 35, so not a strong buy. Getting near the end of the third hour, we had the reversal in the first hour and then a doji bar for the entry bar. It was unlikely to be a bad entry after 5 bull bars. I said we probably would go sideways or down a little bit, not very far down. And bulls 5-minute chart, another buy signal bar at the top of this trading range. So it's a swing, buy, or a wait. If I was not talking, would I have bought above 35? I might have. In general, if the market's in a fairly tight range, I don't like to buy with stops near the top if the buy signal bar is big like that. Because if you're near the top of the range, the probability is less that you'll make money. And if the buy signal bar is big, the risk is more. So you have weak probability and weak risk reward. Break out above the double top. Trying to get up to the 10 high and the high of the day. Is it buy the close? The bulls probably need a third bar because we're right at the top of a tight trading range. There will be limit order bears selling above bars. Not closing on its high, more bullish than bearish, but not strong enough for bulls to buy closes. Bears are hoping for a wedge 24.32, and bulls want to get a breakout above the double top, measured move up to the high of the day. Stalling 9 ticks up above 35, so a lot of the bulls are trying to scalp with 2 points. That tail 36 is because there were a lot of bulls with sell orders, and bears knew that, and there probably were bears with sell orders as well, betting that bears trying to stop the bulls from getting their 10 ticks. They need 10 ticks to make 2 points, 8 ticks. So the bears start selling with limit orders on 8 or 9 ticks above 35, trying to prevent the bull limit orders 9 ticks above from getting filled, and then forcing, scaring the bulls out. So the bulls give up and we get that reversal back down. So the bears wedge 24.32, wedge lower high, but still always in long, still above the moving average. I think probably not worth selling below 37, too many bull bars from the 21 low. Better to wait to see if the bears can get 2 big bear bars or 3 medium bear bars. Or, like I said, sell with limit orders, 32 high. The bulls got their 10 ticks, and you can see it pull back 37. So, indication of some profit taking, bulls wanting a 2-point scalp. But will they buy into the close of 37? Is this converting into a swing up? Will traders buy closes and buy above bars? They need to get bars closing on their highs. We know they're buying pullbacks, 30, 35, but they're not yet buying breakouts. It went above 24, pulled back, went above 32, and pulled back a little bit. We need to see bars closing on their highs above prior highs. And if the bulls get that, traders will see this as a stronger bull trend, and they'll start to buy closes and buy above bars. Bar 36 was the close of the third hour, and it's a pullback and a bull trend on the 60-minute chart. And you can see they bought above the 36 high, which is the 60-minute high, yet they immediately were overwhelmed by bears selling at the high of the last hour, the 36 high. So here we have a bull bar on the 60-minute chart, a bull flag, and an early bull trend. And there were more traders selling above that bull bar than buying. So not very bullish at the moment. Bears trying to create a good sell signal bar. They want 38 to close on its low. Possible IOI with 36, 37 outside bar. And a wedge, 24.32. But bull channel just above the moving average. Mostly limit order trading. Most bulls are not going to sell below 38. Excuse me, most bears are not going to sell below 38. Limit order trading. More traders willing to buy below things and sell above things. What do the bulls do? I think it's reasonable to get out of longs. And for the bears, 3 consecutive bull bars like 32, like 23, I would not short with a stop. The short is with limit orders above 32 or above 36. So probably more buyers than sellers here, but because it's a wedge, 24.32, I did not buy 38. So right now I'm waiting for more information. A pullback in a bull trend, always in long, but so much limit order trading. A lot of the bulls are not going to buy above 39. They're looking to buy below things. And because of the wedge, I did not buy the 38 low. So right now I'm trapped out. I said a lot of the bears wanted a second entry sell, and 40 is the sell. But on the limit order market, that's selling fairly far down from the high. And it's also a 5-bar tight trading range just above the moving average. So not a very good sell, not a very good buy. Best choice right here is wait. You can be long, stop below 35. I would get out of longs below 38 or below 40. And you could be short, below 38, a wedge, or below 40, a second entry sell. Well, we're right above the moving average, and we're tight trading range here. I don't know. I think it's really difficult to take a stop entry trade here, selling below 38 or 40, buying above 39. It's limit orders. Will the bulls buy the 40 low? I would not. However, I think bulls might buy the 35 low, the 60-minute moving average, and the 29 low. And bears are selling above everything, above 24, above 32, above 36. Similar to 30, it's a high 2 buy. Of the stop entry trades here, below 38, below 40, above 39, above 41 has the best probability, similar to buying above 30 over here. Is it worth a buy? I don't know. The market is really much more of a limit order market, and here we're getting fairly late in a leg in a trading range day. Trading range days, the goal for the legs usually is about 2 hours. First leg down was 20 bars, and we've been up for about 20 bars. We're getting late in the leg. Is it ready to reverse down? It's on a second entry sell below 40 or wedge 24.32, but I did not sell it, and I'm not going to buy above 41. That's 4 bars without a bull body. So best choice flat. Probably sellers not far above 41, since it's a bad looking buy. Bulls still in a swing up after the 21 failed bear breakout, but I am trapped out. I thought about buying the 42 low, and I did not. Still on the sell below 38 or 40. I'm flat. I think the math is not very good here for stop order traders. And when the range is as tight as it has been for the past 10 bars, it's not very good for limit order traders as well. the bulls keep failing. We have a wedge 1, 2, 3, and we have a micro double top, up and down, up and down. So we've rallied for 20 bars and we're failing to continue up. Bears are trying to get a leg back down to the low of the day, but not a good stop entry sell setup. Closing on low, good for the bears, but the middle of a trading range day, limit order trading, I think better to just wait. Is it always in short with the consecutive bear bars? It probably is. We had 4 bars without a bull bar here. We have 4 more here. We have consecutive bear bars, but we're at the bottom of a trading range. And a lot of times trading range days, most of the time trading range days do not become clearly bearish until they're about to reverse up, and they don't become clearly bullish until they're about to reverse down. So saying that it's always in short here does not mean sell the close. It means we're probably going to bounce pretty soon. With the consecutive bear bars, most bulls will want a micro double bottom. What do? It's still probably limit order trading, buying below 41, buying below 46, below 35, below 29, even below the low of the day. But you have to use wide stops. It's better if you can scale in, and you also have to be patient. So it's a lot of ifs to do it consistently, profitably. Stop order traders, the sell was below 40 or 38 for the wedge, but not easy to hold short above 42 or above 40. So typical trading range day, just hard to make money. I am currently flat, but I'm not going to buy above 49, even though it could be like 21. It's enough of a surprise. I'll wait for a micro double bottom. If 49 is a bull bar, there probably are buyers not far below. We know there probably will be buyers below 35, 29, and 20. Bulls double bottom 34, but 5 bars without a bull body, so probably sellers not too far above 49. 48 is the end of the 4th hour, close on the low. 60-minute chart, we had a bull bar for the 3rd hour. We traded above its high and reversed down. 4th hour, we have a second entry, a second sell signal. The first hour was a sell signal. This is a sell signal, but it still looks more likely to be a tight trading range than the start of the swing down. So it still looks like a possible pullback from the breakout above this lower high. 60-minute chart does not look like a good sell. Might get one more push up, 1 pullback, 2 pullback, 3. Sometimes the bull trend begins before the bear trend ends. So sometimes you get a wedge where the pullback from the first leg up makes a new low, but it's still part of the, this first push up is still part of the wedge. For the bulls, double bottom 35, but 5 bear bars. I think you only buy above 50 if you put a stop below the low of the day. It's similar to buying above 27. If you buy it, it's better to put a stop below the bottom of the bull trend, because there might be sellers above 27 after 3 bear bars, and you might get a second leg down. And the same is true here. You sell on a stop below 21. I would not. It's a trading range day, and selling at the low is a low probability bet. However, if we break strongly below 21 and have a pair of consecutive decent-sized bear bars closing on their lows, it will become a sell the order market. Remember, we're probably going to get a bear bar on the weekly chart, so we're probably going to close the week below the open of the week. And weekly chart, we have a bull bar doji, bull bar doji. We're probably going to trade this week below last week's low, and we'll probably go sideways to down for 2 or 3 weeks. I don't think we're going a lot lower over the next few weeks, we may have to go sideways before the bears can get a deep pullback. Consecutive outside down bars, so it's an outside bear flag at the bottom of a trailing range today. I know 50 did not go above 49. I know 51 did not go above 50, but it's a type of outside day, or outside bars. As support, 29 low of the day, 60-minute moving average. I think best choice is flat. Momentum down is getting better. The bears now have a 10-bar bear micro channel, 43. Bulls test of the 20 low, higher low, test of the 60-minute moving average, buyers below 29, and parabolic wedge. Bear 45, pull, pause. Bear 47, 48, pause, and then third push down. But 10 bars without a pullback. So 10-bar bull bear micro channel. Most bulls will want a second buy and not buy above 52. So limit order bulls, yes, they're buying. Stop order bulls, they'll probably wait for a second buy signal. Just like a lot of the bears waited to sell below 40, second sell signal, or even below 47. Parabolic wedge, two legs down, 41. Fail breakout below 29. Double bottom, higher low, 20. But stop order bulls, I think better to wait for a second buy signal. Limit order bulls made money buying 29 low, and they made money buying 35 low as well. Can the bears sell 52 high, like 50? Nope, I would not do it. Bottom of a trailing range day and at the 60-minute moving average, parabolic wedge. The bears have not done enough to make traders comfortable selling at the low. I mentioned earlier that we had not broken out of the Globex range. That happens only 10% of the time. 90% of the days, the day breaks either below the Globex low or above the Globex high. After a 10-bar bear micro channel, not a lot of bulls willing to buy with a stop above 52. They were willing to buy with limit orders, but less willing with stop orders unless we get a second buy signal, like the bears had a second sell signal, 40. Low one short, 53, but right at the low of the day and at the 60-minute moving average, and therefore not a lot of sellers below 53, possibly more buyers than sellers. Low one, but probably buyers below 53. I would not take that sell despite a 10-bar bear micro channel. If we get a surprisingly big bear bar closing below 20, then we might get sell the market, sell the close. Stop order bulls want a second buy signal. So they want maybe 54 to fall below 53 and then close on its high. Low one short, but 3 bull bars, bottom of a trailing range day, 60-minute moving average. Most bears will want a low 2, equitable top, and there probably are buyers not far below 54. Limit order bulls, 54, made their money. Bears trying to get a low 2, a bear IOI, 56, but the location is bad, bottom of a trailing range day, right above the 60-minute moving average. Low 2, but bottom of a trailing range day, 3 consecutive bull bars. I like to buy a bar like 54, 3 bull bars, it's a low 1. I'm less willing to buy a low 2, especially if 56 has a bear body, but I would not sell it bottom of a trading range day. So what do? I think wait for the bears. It's a low 256. I would not sell it. And for the bulls, some bulls are still holding long. They bought about 53, and it needed to go up 6 ticks. It's only going up 5 ticks. Personally, I'm more interested in buying 54 low limit order than 52 high stop order. Ours without a bear body on a buy signal, 52, but 10 bar bear micro channel and just below the moving average limit order market. Traders want to buy, but they don't want to buy with stops above 56. Bears would be happy to take a second entry sell if we had bear bars, which we do not. So, well, probably buyers below 56. It's a second sell below the moving average. Not a good sell, but a lot of bulls will not take the second. They will not buy the second sell signal. We should go at least 1 or 2 ticks higher, because typically when you get a reversal up for a sell climax, 51, the market gets to the top of the sell climax bar. That will allow the stop order bulls 52 to make a 1-point scalp. For the bears, they're still trying to create a low 2, but they allowed 5 bull bars. Most bears are not going to sell below 57. Limit order bears selling 51 high made money. Limit order bulls, even though the odds are there are buyers not far below 57, it's a pullback to the moving average. It's a double top bear flag 51, and it's a low 254. So I'm not going to buy the 57 low. Can you buy 1 point lower, 2 points lower? You might be able to, but I'm going to let this play out and see what we get here. We still have not gone below the Globex low, and 90% of the time we break out of the Globex range, and we're closer to the Globex low than the Globex high. So we might get down there. It's also at the big round number around 2,700, which has been a big magnet for a while. Market's deciding, does it get down to 2,700, the big round number and the Globex low, or do we stay in the tight range? The range was resist breaking out. So at the moment, it's slightly more likely that we've seen the low of the day and that we're not going below 52. But I think difficult to do anything with stop orders here, buying above 54, 56, selling below 54, 57. And I did not buy the 57 low because of the low 2 and below the moving average and double top bear flag 51. So right now I'm trapped out. Bulls trying to get a double bottom 52. And bears trying to get down to the Globex low, which would require a break below 52 and below the low of the day, and below the 60-minute moving average, all support. Stop order bulls, it's a buy above 60 for a failed low 2. You can also call it a bigger triangle, now 20, 52. But math is really bad for stop order traders on a day like this. Limit order bulls who bought 58 low, 1 point lower. I did not. They made money. Bar 60, a multiple of 12, corresponds with the close of the 5th hour. I said on the open that despite the series of bull bars, we were probably going to go sideways. And then after the first hour, I said despite the bear bar, we probably were going to go sideways. Unlikely to go down very much after 5 bull bars. Yet, we're probably forming a lower high after this wedge top, so unlikely to go up very much. The market's deciding whether we get one more new high or a wedge, 1, 2, 3. or if we've seen the end of the pullback, and then we'll start the second leg down. Leg one, pullback, leg two. A pullback from the breakout above the reversal 52, but a doji bar after two bear bars, so not a high probability buy. And for the bears, they see this as a low two bear flag, a bear breakout, and a pullback from this bear breakout, but at support. Bad for stop entry trading. The market's deciding, is it going to get down to the Globex low down here, or are we going to get a bull breakout of the triangle? And maybe 50-50 bet. Tight trading range in general. 50-50 chance of a successful breakout up or down. You can see not a lot of bulls willing to buy above 60, and there were a certain number of bears willing to sell at the moving average. Still breakout mode. Not a good looking buy, not a good looking sell. And apex of the triangle that began over here, 16. Best choice, flat. Wait for the breakout, or wait for a bear breakout to fail and reverse up and then buy, or wait for a bull breakout to reverse down and then sell. That's a bear breakout here, trying to get down to the Globex low. So we had a small bull breakout 61, and a lot of those bulls who made the mistake of buying are getting out. Good bar for the bulls. Can they close it on the high? Can they get a follow through? I tried to buy a one tick pullback with a limit order as it was going up. I did not get filled, so I'm flat. I was looking for a quick 1 point scalp. On other days when the bars are big and the range is big, sometimes I'll buy with a 1 or 2 tick pullback limit order. But with today being so small, some days I'll just go ahead and buy at the market. A lot of days I'll buy at the market, but with today being so small, I'm going to buy only with a limit order on a 1 or 2 tick pullback. So I ended up missing it. We tried to break to the upside 60, 61, and then to the downside 62, and then the upside 63. And now again, new low of the day, trying to get down to that Globex low. And right now, I suspect we'll get there. 90% of the time we break out of the Globex range, and this is late in the day, but I suspect that we're going to get there. Bulls are hoping it's like 20, but I suspect it's going to be successful. We tried to break out to the upside twice, 61 and 63, failed both times, and the bulls should have held that 20 low. Trading range today, so you have to assume that there'll be bad follow through. However, right now I think we're always in short, and I think we'll probably get down to the Globex low. Unlikely to become a strong bear trend, because that's you typically don't go from 62 bars of trading range trading into a bear trend for the final 20 bars. Closed at the 20 low, not below the low. Also did not close on the low of the bar. Bulls hoping 21, bulls hoping 65 looks like 21, but unless it's perfect, bulls are not going to buy above 65. I think they realized twice they had attempts to go up 61, 63, failed twice. So I think the odds are we'll get follow through selling. What about the argument? It's a trading range day and it just keeps reversing. That's a good argument, but let's see if 65 looks like 21. That's what the bulls need. If they get it, then this is probably a failed breakout and a big high two legs down, one pullback two, and it would be a credible buy. But if it does not close on its high, most bulls will wait. If it is a surprisingly big bear bar closing on its low, then we probably will get a bear trend into the end of the day. Limit order bulls bought 20 low. They tried to buy more, 1 point lower, unable, had to fall 5 ticks. The bulls who did buy the 20 low have already made money. It bounced 5 ticks. If this was going to be a big bear trend, you would expect 64 to close on its low and close below 20, and you would expect no big bounce like we're getting 65. Even if we go lower, it's probably not going to be a big bear trend. It'll probably be a test down to around the 2,700 big round number and the Globex low, and probably buyers in that general area. Bull bar. So bears might get up above 65. They might wait for one more bar. And while the bulls hope this is a failed breakout and the start of a rally into the end of the day, that tail 65 will make a lot of the bulls wait to buy. They'll wait to see 1 or 2 more bars. Bulls trying to get a second consecutive bull bar, closing on its high this time. Most bears, I think, will get out above 66 if they did not get out above 65. And bulls, I don't know. It's buying fairly high up in a trading range day. I think the buy was the 20 low rather than the 64 or 65 high. It's a big enough bounce so that a lot of bears are not going to be looking to sell. They might sell below 67 or 68 if we start to go sideways, but they're not going to sell below 66 unless it suddenly becomes a big bear bar. Not likely. Are we back to always in long? If 67 closes a couple ticks above 64, we probably are. That would be a close far enough above the moving average. However, because of the trading range day, traders do not like to sell on the bottom of anything, and they do not like to buy on the top of anything. So even though the market is probably always in long right now, not a strong buy above 67. If you're buying up there, you're betting on a trend, but look at the prior 67 bars. It's not a trend day. And for the bears, what do they do? Can they sell above 63, above 57? We're now in the final hour, and that increases the risk for limit order traders because it goes up, you sell more higher, it goes up, sell more higher, and then the day ends and you're stuck with no way to get out. 60-minute chart trying to get a high 2 buy, high 1, and then high 2. And they're trying to hold above the moving average to get at least one more push up. 1, 2, 3. It still looks more likely than not that we'll get one more push up. Bears another lower high, 63, but 3 bull bars, each one having better looking bodies. So probably buyers below 68. Will bears sell 63 high, 57 high? This late in the day, I'm hesitant to sell a rally with limit orders. Might buy below 68, but not sell above 63 or 57. The bears got their breakout and they were unable to sustain it. We've been in a bear channel since bar 2. We had an attempt to go up here. We went above a couple minor highs, but not above these highs. Going to be limit order. Bears selling above things, 63. The ones who did make money, I did not take the sell. We're probably going to get a higher low. The bears are hoping the bear channel continues all day, but with 4 consecutive bull bars, probably buyers not far below 69. A lot of trading range trading. We're getting near the end of the hour. The hour opened with bar 61, so we may test that 61 open before this hour finishes. The bears obviously do not want the bulls to get a bull body, and the bulls want the bull body, so we may test that 61 open, which is right here, 2706. However, probably buyers below 69. For the bears, double top 63. Other computers, double top 57. Whenever there's a trading range day, this is a trading range day, even though it's also a bear channel. Whenever there's a trading range day, there's always a magnet at the open. However, there's been so little movement today, I think the odds are against the market getting back to the open. Next target would be maybe the middle of the day's range, which is around here. Yesterday's high, also a magnet. I tried to buy the 69 low, hit my price, but did not fill me. Limit order bears selling yesterday's high and the 57 high and the 69 high for scalps. Stop order bears, micro wedge or micro double top. I would not do it. Right now, I do not have a limit order to buy the 69 low. I thought we would get a little bit more up after the first bear bar. Well, we got a little bit more up on 70. So it achieved what I thought it was going to do, but it did it without me. So now I got to wait. It's probably okay to buy the 70 low and 1 point lower, 2 points lower, but it's probably better to look to buy 1 or 2 points lower or look for a higher low, like 27 or 30. Similar thing, bear breakout, reversal up, pullback. Sometimes you get a couple legs. My mic was off. Bulls are so desperate to buy, they're not allowing a pullback below 69, below 70. If they're that eager to buy, we can get a breakout above 70 and then a quick measured move up to the open of the day. That's what the bulls are trying to accomplish here. Can you buy the high one above 71 and IOI? It's a tough call. I'd rather buy lower. And the alternative is to wait to see what the breakout looks like. And if it looks strong, you buy during the breakout. Ticks over 700. So that makes sense that we're trying to test that high. Typically, you'd expect a new high in price after the highest tick reading of the day. But today's a trading range day, and ticks are less reliable in a trading range day. 9-bar bull microchannel. So not a good sell below 72. We had a similar thing here for the bears. First reversal up, you'd expect minor, and first reversal down, probably minor as well. Bulls hoping to get a surprise bar up here on 72, and then a quick move up to the open of the day. But I don't want to be buying too high, and I cannot sell when there are 8 or 9 bars in a micro channel, so I'm on the sidelines. What do? Well, it's climactic, but I think not a stop entry sell. Excuse me. Limit order bears keep selling above everything, above 63, above 57, above 70, but they're mostly scalping. I'm assuming they're all scalping. Stop order bears do not have anything to sell. What about limit order bulls? Will they buy below 71? They might, but it's really late in the day. And the purpose of scaling in is to increase the probability of success. But you need time to make it work. And doing it this late in the day, you do not have that time. And therefore, it's not, I think it can be a very dangerous strategy. It's interesting. Bar 72, the end of the 6th hour, we went one tick above it, 73, sold off. That's the same as the end of the 3rd hour, 36, 37, 60-minute chart. We have a buy signal bar, high 1, one tick above, sold off. We have a high 2 above this bull bar, one tick above, sold off. The bulls are creating buy signal bars, 60-minute chart, but nobody's buying above those bars. More traders selling above. We've had big bear bars several times today, 11, 20, 64. Everyone was followed by a bull bar, and the bulls who bought above the bull bar made money. So, but every one of the prior ones was at the low of the day. This is a higher low. However, if we get a bull bar of 74, I suspect the bulls will buy, just like they bought above 12, 13, and above above 52, above 65, above 21. For the bears, a low 1 below 74. But more likely it's a pullback from this rally than a failed breakout and the start of a swing down. I'm not saying we're going up. I'm just saying I think we've probably seen the low of the day. We've been holding the 60-minute moving average all day, and this is probably simply a test of it. Not a strong sell below 72. We had 6 bull bars and an 8 bar or 9 bar bull micro channel. So we had some limit order bulls buying 72 low, buying more lower, trying to get back one tick above the 72 low to get out, break even on their first buy with a profit on their lower buy. I thought about buying the 73 close, and I was too late to make up my mind and did not take the buy. Look at the big bear bars, 11, 20. Pretty much any big bear bar today that closed near its low, it was profitable to buy the close. Low 1, 74, but bull bar, and probably buyers not far below, like around the 67 high. Still always in long from that reversal up, but not a very good higher low buy. Probably buyers below 74. Might be sellers above 74 around the 72 low. The bears want the day to close on its low to be a sell signal bar on the daily chart. It's currently an entry bar. We had a high 1 bull flag Friday, and we triggered it by going above Friday's high today. but so far a bad looking entry bar plus parabolic wedge, and I think we're coming down here over the next couple of weeks. Limit order bulls quickly bought 75 low, and limit order bears might sell 75 high, but we have a magnet 72 low, so I think we'll probably go up at least a couple more ticks. Bulls sold 72 low. They bought the 72 low, bought more lower, and when it went back to the 72 low, they sold, and that's what's causing this hesitation. You also have bears selling yesterday's high. Can you buy up here? It's all scalping, and most of it's limit order trading. I think we're slightly more bullish than bearish because of that failed breakout low of the day and 8 bars up. But I would not be buying high, hoping for higher. You know, if you're buying with limit orders below things, scaling in lower. And for the bears, can you sell 75 arguing I, but bear bar? I would not. What about selling 73? I would not do that either, even though that's been a good strategy all day. Limit orders, I think, too risky this late in the day. Probably going to stay right around here for the rest of the day. Bull breakout, but I'm letting it go. Usually you're going to get by the close finish. It starts earlier than this, and therefore this is probably not going to go very far. And it could be the opposite of all those bear bars. 11, 20, 54, 64. There may be more bears selling the close of 77 than bulls buying. The bulls would like to get all the way back above the open and turn the day into a bull day on the daily chart. But if they're successful, they'll do it without me. It's too late in the day to be buying closes hoping for an end of the day rally. You can see as soon as the bar closed, they sold the close, at least for a scalp. What do the buy the close bulls 77 do? They lose money, right? And I think if you're a computer, you can trade this late in the day like this. But I personally get tired, and I don't think as quickly, I don't react as quickly, and whatever edge I have, I think is much less, if it still exists at all, this late in the day. So I tend to be pretty selective about what I do. You can see clearly that they sold the 73 high, and in particular the 77 close. Trading range day, mostly limit order trading. Weekly chart, even though it's hard to tell, last week was a bull bar. That's 7 consecutive bull bars. And I quickly scrolled back last week over the past 10 years, and I did not see any time when the market had 7 consecutive bull bars on the weekly chart. So it's a rare event and therefore unsustainable. You know, what about 8 or 9 or 10 consecutive bull bars? Even less likely. And therefore this week we'll probably have a bear body, which means a close below the open. We may trade below last week's low. However, 7 consecutive bull bars, there probably will be buyers not far below. I think we'll probably pull back a couple of weeks, maybe 3 weeks. Ultimately, I think we're going down to the February low, 2,500 area, and then also maybe the close of 2017, which is not too far below. That was such an important magnet. All of last year, we just kept oscillating around it. So at a minimum, I think we'll go there. I think we'll probably get down to the February low, the bottom of the year-long range. And then I think we'll get a second leg up to the 2,800 area. Daily chart, we gapped down last week, we gapped up today, we closed the gap today. This looks similar to this. Bulls are hoping that we just go sideways, maybe to the moving average, and then get one more leg up. They want to break above this triple top. And I suspect that this is unsustainable. Buy climax, buy climax, buy climax, buy climax, yet within a big trading range. Therefore, I think we'll probably pull back here at some point over the next couple of weeks. Less likely we just keep going up and we break above the triple top. 5-minute chart, really pretty sloppy trading. I mentioned on the open that Friday was a bull trend day and it ended with a buy climax. We gapped up, and that's the second consecutive buy climax. And I said that when you get consecutive buy climaxes late in the bull trend, you're probably going to end the bull trend at least for a while. So I said we may have an early high of the day. It turned out bar 2 remained the high all day long. And we quickly entered a limit order market. The first bar of the day, doji bar, I said it increased the chances of trading range trading throughout the day. And then same with bar 2. For the bears, they could sell below 2, taking a chance high of the day, but 2-tick bear body, 2-tick tail, not a great sell. We had 3 bear bars, bar 4. Might be always in short, probably get a second leg down. I think we'll close the gap. We did. And the bulls had a high 2 above 6. You can call it a wedge on a smaller time frame chart, down on 1, up on 1, down on 4, up on 5, down on 6. But bear bar, bar 6, and 5 bars in a bear micro channel, probably sellers above 6. And then tight trading range, limit order trading. Then we got a bear breakout on 11, good for the bears. Close below 6, good for the bears. But then bad follow through 12 and 13, increasing the chances of trading range day instead of a bear trend. That was the bear chance for a bear trend. They got another breakout 20 and another one 64. But on all 3, more traders bought the close. And that's typical in trading range days. If you have big bear bars near the low of the day and you get a reversal up, that's a sign of a trading range day. More bulls buying the close of the bear bars, 11, 20, and 64. And I said they probably would buy 73 as well. And then bears do the opposite. When they see strong bull bars near the top of anything, a prior high, the bears sell the close. They sold the 10 close. Some sold 22 close, 23 close, then 71 close, and then 77 close. Traders bet all day long that the day would remain a trading range day, and every attempt to break out of the top would reverse down, and every attempt to break out of the bottom would reverse up. For stop orders today, below 2, you could do it for a swing. It turned out it was the high of the day, but hard to hold short. The bulls had a high 1, there's a high 2 above a 6 with bar 1. You can also call it a high 1 and then a high 2 up here. I think it'd be hard to hold short above 8. That's the second buy signal for a high 2. And bears broke to the downside. Let me go back to stop orders. Below 2, not high probability. 3 consecutive bear bars, 4, room to the moving average in yesterday's high. We're probably going down a little bit more, but I suspect not a lot more. The bars are not all that big, and every one of the first 4 bars had conspicuous tails. And then none of this is good stop order trading. Above 12, can you buy? I'll pull back to the moving average. A failed breakout. It's a doji bar. Higher probability buying above 13, an outside up bar. Even then, not all that good. 17 closing on its low, but I suspect will form a higher low. 21 for a failed breakout, also a wedge with 6 and 13 closing near its high, possible low of the day. I think that's a reasonable stop entry buy. The bears double top 24 and 20, bear bar closing on its low, but 3 consecutive bull bars. I think we may have seen the low of the day, failed breakout below the 18 bar range, and therefore 24 is not a great sell. I said 27 if you buy it, stop below 21 because we may get another leg down, which we did. And 30 is a high 2 buy, reasonable buy. We got a breakout 32, a pullback 35. So it's a breakout pullback buy, but we're at the top of a 20 bar trading range, so not great. We have a wedge rally, 24.32, and a sell signal bar, 38. Better to take a second sell, 40, but at that point, we have 4 dojis, and he's selling fairly low, so not great. Bulls have a high 241, but 4 bear bars, not good. The bears have an IOI 44, but a bull bar, not good. It's still on the sell below 38 or 40, but most traders would have gotten out probably above 42. We had a bear inside bar closing on its low 47, probably going a little bit lower, maybe to the 60-minute moving average. 48, 49, both closing near their lows. So you could take the short, but we're probably going to get buyers around the 29 low and the low of the day. Outside down 51, but right above the 60-minute moving average. I would not sell with a stop that low in our trading range today. The bulls, parabolic wedge on 52, 3 legs down, 45, pause, 46, 47, 48, pause, and then 51. But 9 bar bear micro channel, so probably a minor reversal. So the bulls above 52, it took them 6 bars to make 1 point. I would not buy above 53, 54, or 56. And then buying above 65, tail, not great. 66, 67, higher probability, but you're getting high up in a trading range day, not good. Buy the close, sell the close. Bar 3 did not close on its low. However, bar 4, 3 consecutive bear bars, it sell the close, but stop above 2 and probably a lot of trading range trading. So today is not a good buy or sell the close day. If anything, it's opposite. If you see a sell the close bar, you have a better chance making money buying it. If you see a buy the close bar, you have a better chance of making money selling it. So it's better to buy the 20 close or the 64 close and sell the 77 close than to buy them. Same with the 10 close. Limit orders. It was just limit orders every day, all day. Anytime it went above any prior high, traders sold. Above 7, above anything, above any of these highs, they sold and made money. Anytime it went below a prior low, they bought and made money. There were some bad bear flags, like below 8, they bought it, a bull bar. Below 12, a bull bar, they bought it. And 3 bull bars here, they probably bought below 24, expecting a second leg up from the wedge. 28, same thing, probably buyers below. Near the low of the day, 54, buyers below. Turned out buyers below 57 as well, even though below 2. And 72, probably buyers not far below. And then opposite's true near the top. If you have bull bars near the top, there are probably sellers above, like above 8. Then probably sellers above 41. I said bull bars near the top. I meant bear bars near the top. But probably sellers above 41, a high 2 after a wedge, and then 4 bear bars. And then up here, it's mainly just selling above bars, above 63, above 57, above 70, above 73. So really kind of a boring day if you're a stop entry trader. Not a lot of easy stop entry trades, and all of the best ones, most of the best ones, were reversals. And they're not that easy to trade. Buying 21 after you see 20, buying 30. I said buying 27 was okay if you put a stop below 21. We had 3 bear bars, and we did get a small second leg down. And 52, all those bars in the micro channel probably going lower. 65 did not close on its high, so the buy was above 66, and now you're getting fairly high up. But sometimes you get days like this, and you have to trade what's there, and not worry that it was not a good limit order day. It was, not a good stop order day. It was a limit order day, and most traders, even most experienced traders, I think, prefer stops to limit orders. Let me look at questions. Question about February 7th. Do you think bar 42 was a double bottom major trend reversal, or on the other hand, it was a minor reversal, and 58 was the truly major reversal? When I looked at the charts and I saved them to the PowerPoints, I made some observations about them. But his point is this: with the sell-off that steep and the rally only being 4 or 5 bars, and the sell-off down being only 4 or 5 bars, is this a major reversal or a minor reversal? It's one of those situations in which I think this bars up and the bars down there are not enough bars to reverse this. So I would assume it was a minor reversal, but it could be a major reversal, and I think it's an okay swing buy about 42. And we have 4 bear bars here, 58. So is it a major reversal? It's still probably minor after, like, it's 5 bear bars. So the major reversal was probably either about 68 or better, 74. So to me, that would be the best candidate for a major reversal. What's your opinion about the daily and weekly chart of silver? Silver and gold tend to be very similar. Here's the daily chart of silver. We do the weekly chart first. Distance to the bottom of that trading range, and therefore I do not want to buy up there. Daily chart, 2 pretty good legs up, a lot of bull bars closing on their highs, not much overlap, right? And then a second leg up, same thing. This might be strong enough to get 3 legs up, 1 pullback, 2 pullback, 3. However, it often happens that you get 2 legs up and that's it. The market right now looks like it's deciding, does it have 1 more leg up and then a swing down, or will the swing down begin with this second leg up? I would not trade it. For the bulls, it's a swing buy looking for a new high, but they're probably hoovy sellers above. And for the bears, too many bull bars. I would wait for some kind of a double top or a second sell signal. So I would not short now, but if we get up to this high, a little bit behind and reverse down, then the bears might have a wedge top, or if we get to this high and reverse down, a double top. So I would look for, I would sell higher, and for the bulls, I would wait for the bulls to start getting bull bars over the next few days before buying. Can you talk about your scalps that you took today, and how much time do you wait between them? By the end of the day, I just lose track of what I took. But it's the kinds of things that I talk about. I post the chart at the end of the day, and I post pretty much all the reasonable stop entry trades. On most days, I end up not taking most of them. I try to take as many as I can. And then on a day like this, a limit order trade, I'm just sitting there placing limit orders to buy at prior lows and sell at prior highs, and scaling in. If we get a pretty good reversal up, and I think we'll get a second leg up, I'll buy the first reversal down, like below 54, below 23, 24. When you get a big bear bar like that, I typically do not buy the low of the bar. I instead buy 1 point lower, 2 points lower. I think I did that today. And there were an incredible number of trades today. I would say probably at least 50 scalps today, but most of them were limit order scalps. Good question. Repost with examples. What do you think of substituting an at the market entry for a limit entry if you want confirmation that the market is going your way before entering? Instead of a 12 low limit on bar 13, buy 13 information instead of buying the 13 low during bar 20, buy 20 or buy 21 information. So I think what he's saying is instead of placing a limit order to buy the 12 low, wait for it to go below 12 and start to turn up and then just buy at the market. I do that a lot. And instead of buying the 13 low with a limit order, wait for it to start to reverse up and buy on 21 or buy with a stop above. I do that a lot. A lot of times, instead of taking the limit order entry, I'll wait for a reversal, but enter before the bar closes. So I do that quite a bit. I think that's okay. It can be just, I don't know. For me, it's not fun buying with limit orders on breakouts to new lows and selling with limit orders on breakouts to new highs, unless there's some other pattern going on with it. And in a trading range day, there's usually not a good pattern at all. On a regular day with bigger range, not tight trading range like this, you often get decent looking wedges and micro double tops and micro double bottoms. But today is a very tight range day, and you have to assume all day long everything's going to look less good than you want it to look. And if you're going to trade, you have to put the limit orders at the prior lows and scale in, or instead of buying at the prior low, place a limit order to buy 1 point below a prior low, and instead of selling at a prior high, place a limit order to sell at a prior high. But your point about instead of putting the limit order there, wait for the market to fall below the 13 low and buy in the reversal up at the market, that's okay. Usually what happens when you try to do that, you end up entering at a worse price, because by the time it's starting to turn up, everyone has concluded that the low is in and that we're going higher, and it quickly goes up. So if you don't take the original limit order buy, or up here, if you don't take the original limit order sell, typically, if you're entering at the market, you're going to get in at a worse price, sometimes 2 or 3 ticks worse, because by the time you wait for that confirmation, so many traders have already decided it's clearly a good thing to do. You'll be forced to enter at a price worse than what you could have had you entered with a limit order. Okay, what is the biggest tip to someone trying to become a consistently all-day scalper? Okay, so you're saying what's the biggest suggestion if a person wants to become an all-day scalper? My first suggestion is first become a swing trader. And what will happen is if you're trading consistently profitably as a swing trader, you'll start to see all kinds of little exceptions where you'll want to get out and then look to re-enter. And what will happen is you'll kind of naturally transition into scalping. So I'd rather do that than starting out saying I want to scalp. On a day like today, there's really not a good swing trade because it's really hard to sell below 2 and hold short with the market reversing up repeatedly like that. And it's hard to buy above 21 and hold indefinitely, hoping for a swing. And if you did, you would have made a couple points, get out below 39, but then hard to sell below 39 and stay short. So this is an unusual day. It's a tight trading range day all day. So it's not representative of what you'd see on most days. But Friday and Thursday were more representative, and it would be easier justifying selling below 2. You can get out down here, you get a swing, buying above 29 and get out up here or up here for a swing. That kind of behavior is more typical. But as far as scalping goes, there are all those little limit order scalps that I talk about all day long. But I think most traders will lose money because every day when you have a day like this and there's a reasonable sell, you'll take it there'll be at least 1 or 2 reasonable sells that you take, or 1 or 2 reasonable buys that you take, and the market continues to go against you, and you start to think, oh my gosh, it's turning into a trend, I got to get out. And you'll end up, instead of selling more or buying more, you'll get out and take a fairly big loss. And if you do that a couple times a day, you'll be so far down that you'll have no chance of getting out break even. So if you're going to scalp, first of all, I'd try to become a successful swing trader. Second, I would trade much smaller than I think is necessary. I would use wider stops than I think is appropriate, and I would scale in. And that combination of things makes it virtually impossible for most traders to consistently make money as a scalper. It's hard to do all those things right many times a day. But I've known many extremely profitable scalpers over the years, so it can be done. All right, today a very quiet day, and market's deciding, do we get one more push up? Friday was pretty strong, it looks like we will, but we might not. I still think we're going to get a second leg down from the 60-minute wedge. I think this is the first leg down, and we might get a couple legs up, one pullback, 2, and then a second leg down. And sometimes that second leg down can be much bigger than what you think is possible. So it does not have to be leg 1, pullback, leg 2, and it does not have to stop in here, but I think it probably will stop in here. But we'll see. I think we're going to get a second leg up. I think everything is going to start turning into slow motion. The bars are getting smaller. We're getting a lot of dojis. I think we might go a little higher, but I think basically what I think is going to happen is we're going to sell off for a month or two, starting at some point in the next month, and just drift downward, never looking all that bearish, and then we'll rally again, and the rally will never look all that bullish, and then we'll have 2 big legs up, leg 1, pullback, leg 2, and stall out around the triple top, and then just go sideways for a couple months. So near term, we're looking for a top to end the first leg up, then a month or 2 down, and then a month or 2 up, and then sideways. So essentially sideways for the next many months in search of a top, which might be here, might be a little bit higher, and then we'll be in search of a higher low bottom, might be all the way down here, maybe a little bit lower, maybe a little bit higher, and then a new high above this high, and then this for several months. Okay, hope everybody has a good night.